So Trump getting ready to sign the end of the government shutdown, 9:45 p.m. tonight. If you're watching this video, it might have already happened. If you're a retail investor right now, pay attention to the data that I'm about to cover in this video and be careful.
Bitcoin fear and greed index falls to 15. Everybody, we are in extreme fear territory right now. I can just tell you right now, we've been here so many times. Many of you know what I'm talking about. But as I start this video, which will be very data backed, I'm excited to present the data to you. I'm excited to talk about what we're going to talk about. And I want to start the video by showing you something incredibly simple. And we're going to dive into these things. And I'm going to explain why right now it appears that there is a massive redistribution from retail to big money this cycle. This is something that we've never seen. But let me start by showing you something. If you look at right now, the business cycles, we've been talking a lot about this, right? The similarities with QT coming to an end December 1st, QT came to an end September 2019. But I want to just throw some other things into the mix. Realize what's happening. Guess what? We just had a crazy tariff fear capitulation in April 2025, right? So that's tariff fear, QT ending, all right here. Go back to last cycle. If you remember Trump in his first administration, insane tariff fear really marking the bottom of the bear market in 2018. But you know what else was getting ready to happen? Quantitative tightening ending. Let me just throw something else in the mix that's kind of crazy. So now we have QT ending, tariff fear. We have QT ending last cycle, tariff fear. But guess what else? Now we have shutdown. Did you know, if I zoom in on this chart, this is the altcoin market cap chart. If I go back to that last cycle, here's the December 2018 bear market lows. Did you know right there, December 22nd to January 25th, there was a shutdown? And I want to actually make a quick note. Even after the shutdown ended on January 25th, crypto fell a little bit more. So on the short term, please just note, we could fall. We might fall in the coming days. That is not the point of this video. It's not the point of my analysis really ever. I'm a macro-minded investor, and I've been very patient this cycle, focused on data. But zooming back out, notice this. We have three very similar things happening while the business cycle, and that's what this chart is. This is the PMI chart. The business cycle has continued to reset for years. If this goes into expansion phase, like it has in previous cycles, a bull thesis is probably the thesis that makes the most sense. And this is what I want to talk about in this video. So hit the subscribe and like on the way in. If you're not in our intelligence system with our risk models, get back there. We have a free trial going on right now. So click the link below. We've got our risk models, our exit planners. And right now, if you're a macro investor, even if you're not using our system, I encourage you, start planning, start focusing on data, especially as we evaluate the fact that so much of retail is basically seemingly getting shaken out right now. And institutions, big money is buying. Focus on data. Don't look at comments on social media from mostly retail or bots. So let's start the video. Extreme fear, yes. Right now, the government shutdown getting ready to come to an end. Trump is, I guess, it's like 8:25 p.m. I think 9:30 p.m. scheduled to sign this end of the shutdown. But a couple data points I want to go over with you that are incredibly just so important to all of us, and then we'll look at some charts. Okay, let me first start with this one. This is CryptoQuant. Historically, when short-term holders are selling at a loss, it often corresponds to a cleansing phase for the market that can mark the final stage of correction. So short-term holder profit and loss to exchanges, 24 hours. So if you just take a note of the screen, there's another chart that I want to pair this up with, or another piece of data I want to pair this up with. Just look at how this has kind of marked these bottoms. You see these swing lows of this kind of red line, and it's marked the bottom of Bitcoin. That's short-term holder loss to exchanges. I want to show you this one. Liquidity pattern has appeared before every Bitcoin surge, and it's back. So another bottom indicator. We're witnessing a liquidity configuration that has only appeared a handful of times since 2020. Each instance marked a pivotal moment for Bitcoin's trajectory. So let me pull this on the screen for you. This is the stablecoin supply ratio. So this is basically stablecoins relative to Bitcoin. And when we see more buy side liquidity because of stablecoin ratio, things become bullish. So if you look at the purple line is the stablecoin supply ratio. Every time stablecoin liquidity spikes, Bitcoin gets a new leg up, is basically what this is saying. And we're back at that level again right now. And to put it very simply, there's dry powder loaded on the sidelines, ready to go during kind of this phase of Bitcoin consolidation. And this has happened many times. That's one data point. Let's continue this story though. This is meaningful. The SEC has officially approved the first ever spot XRP ETF in the United States. The headlines go on about XRP. It's a big day for tomorrow for XRP. But listen, for altcoins, for the crypto space, for the entire narrative of crypto cycles, everything that I've been doing as a crypto investor, these headlines are so meaningful. Solana holders, Cardano holders, doesn't matter. This is XRP headline, but it doesn't matter. Looks like it's game on for first 1933 Axe Spot XRP ETF. Canary Capital will be first to market. The official listing notice for XRPC has arrived from NASDAQ. Looks like tomorrow is on for the launch. Why am I bringing this up? The story continues, everybody, of what is happening right now. This isn't my opinion. I'm not speculating. This is what's happening. Bank of America says institutional clients were net buyers of U.S. equities last week. Please think about all of the fear in the market right now. Please think about it. And we're going to actually talk about this more. There's this concept of fear and what's out there and what you see in the comments and the headlines. And then there's this concept of what's actually happening. So many people don't focus on what's actually happening, whether that is on-chain data that we just looked at, whether it's actual risk, whether it's this. Institutions were the only net buyers, while hedge funds and retail investors sold. All the while, selling in extreme fear environments. Selling in extreme fear environments. Sell. People need to sell when they need to sell. But one thing that I've learned is selling in extreme fear is like the worst thing to do. Sector flows showed a defensive tilt with outflows from tech and communication services, inflows into staples and healthcare. Bank of America noted institutions, and I know this isn't related to crypto immediately, but we're going to get to that. Bank of America noted institutions have replaced retail investors as the main dip buyers this year, as corporate buybacks remain below typical seasonal levels. ETF flows are intense. People must have missed all the articles from economists and columnists telling them everything is bad. This is what happens, everybody. You see the headlines. I think so much of it is coordinated to do exactly what's happening, shaking out retail, and even more so in the crypto space. I'm not going to get into that. $13 billion yesterday, $40 billion for the past 5 days, $8 billion a day pace. Year to date now, $1.16 trillion, just padding record at this point, mostly equity buying with some cash. Follow this. I just saw this post. Today was the biggest. This was November 12th today. Today was the biggest ETF inflow day since before the October 10th crash, even with it being a red day. This is looking more and more like the Bitcoin IPO theory where early adopters are cashing in and Bitcoin is trading hands to new holders. Fine. Let early adopters cash in. But it's not just early adopters. It's also short-term holders like we just saw on this other chart, right? We just saw the data point. Short-term holders. When short-term holders are selling at a loss, it often corresponds to a cleansing phase for the market. Short-term holders are selling in extreme fear environments. Pay attention to that. While we have this now, the segue to altcoins. Upcoming altcoin ETFs could draw $14 billion in inflows. The bank sees XRP ETFs topping $8 billion, Solana ETFs near $6 billion within 12 months. And we have others. We have a ton of altcoin ETFs in line. Here's Grayscale today. One, the SEC could just let these filed S1s go automatically. This is concerning once the government reopens. So this is very relevant to what's happening literally in an hour. SEC could just let these filed S1s go automatically effective after 20 days and then not do anything. or they could engage with issuers again, ask additional questions, if there are questions, and start back on the process that was underway prior to the government shutdown or various permutations of that. So that was an article that written by Block that they were referencing. So here's what's in play right now for altcoin ETFs. But please keep in mind, the velocity and traction in which altcoin ETFs can pick right back up can happen very fast after the government reopens, which is, again, tonight. So everybody, all of this happening at the confluence of everything that we've been covering, at least I've been covering on this YouTube channel, and I'm just remaining very just bullish to my thesis right now. I'm patient. There can be more downside. I 100% realize that on the short term. But I'm just saying the way in which this cycle is setting up, and with all of this data suggesting that retail, once again, is selling into a high fear environment. Retail is selling. They've been selling right here. This is the altcoin market cap chart. There are a lot of people that are frustrated. I'm dealing with it every day in my comments. It just kind of is what it is at this point. But we have been in higher high, higher low environment for altcoins. It's just not been a parabolic bull market like clockwork. Here's the deal. To wrap this up, QT ending, government shutdown ending, tariff fear over. This is exact setup to pre-bull market last cycle. And if you go and you look at the PMI chart, once again, this business cycle chart, look at the bull market last cycle, what the chart did. I'm not saying it's going to do this again. Look at how it's been different, right? When it makes these kind of moves to the upside, it's different every time. I don't know what it will look like this time. There's so many moving parts that nobody in the world knows. But if we look at this, QT is about to end. Even the government shutdown is a short-term liquidation kind of event. I'm sorry, not liquidation, liquidity event. So this starts expanding. Guess what? The charts like altcoins, like ADA, look at ADA flowing with this PMI chart. If this starts expanding like it did last cycle, after quantitative tightening ended, after tariff fear was all over, after the government shutdown was all over, interest rates start coming down even more, this starts expanding. What are altcoins going to do? I don't know. I say this all the time. They could all go to zero. But again, as an investor, as a macro investor, there's so many things that are just so cool happening in the crypto space right now. There's never been like a better time to get positioned in crypto. I just think that. And it's very hard to change my mind when you start just looking at data. I'm not talking about looking at a 4-year theory, a 4-year cycle theory post, like that's just saying 4 years is up, it's over. I'm saying when you look at the data, all of these things, there's so much. You're not going to convince me to be bearish right now. That's the riskier move in my opinion. And yeah, it could all just fall. I mean, even this Cardano chart, I'm not doing Cardano TA right now, but it just looks like it's going to go to this trend line, right? But that does not even change my bull thesis for this cycle. So those are my thoughts today. I just wanted to kind of put this video out there as the shutdown does kind of come to an end. There are so many meaningful moving pieces that I try to cover in these videos. And hopefully I'm doing an okay job of kind of communicating to you my thoughts, and that's all they are. They're just my thoughts and opinions, everybody. You can disagree, and I completely respect that. But I want to put my thoughts out there as I track this because I'm so interested to see what happens. So again, if you're not in our intelligence system, get back there. We have a ton of altcoin risk models, and just start planning. Start gauging risk. We're at a 20 right now. Imagine we start moving into a bull environment, getting indicators, getting alerts of kind of good time to sell when things get too risky. That's what this system is for, completely backed by data. This isn't just something we just threw together as like a heat map. We have a risk algorithm, emerging asset theory, game theory, the price, volatility, volume, all of these things is what is being displayed here. So it's not predictive. It's not meant to predict what's going to happen next. But when we get into key areas, whether it's very low risk or very high risk, it's designed to alert you so that you know, buy, sell. That's what this is for. So these are my thoughts. I appreciate you watching. I will see you all next video. God bless.